Okay, so literally just turning on the screens, and um, if we recall, we didn't get anything yesterday. We had this of it being a first green day on Tuesday, and all of the action occurred in London for that upside opportunity. Did come back in on the inside. It was a late. It wasn't really anything we could. Um, uh, that there was nothing for us. It was a dead day, right? So um, we were coming lower into New York. Yes, the thesis was bullish, but we just couldn't get the explosive breakout that we wanted, and that didn't come until today. Um, Again in the London session. So we've got that move that's moved up, respecting the broader trend line. This was talked about within the FX Street news that I write. So you can follow me at FX Street, Ross J. Berland. I write continuous updates in the news section on the website. And for my articles, you can just simply write in Ross for currency, for instance, USD. In the latest news that I wrote about the cable, I talked about there was a bullish fake out that left 120, 10, 50 vulnerable ahead of the 38.2 fib upside potential. Um, so we can go ahead and take a look at that article just as an example. So it talked about the fake out that we saw in the US session. We were looking at 2050, 2050, a little push into here. So let's see how that panned out. Onto the hourly, and that's exactly what we saw. So we've got that little push into 2050 with a low of the day, 2056. That occurred in the Asian session, the New York Asian session, and then that continuation explosive move. So we're now looking at a scenario where we might have a dip back. We've taken out the 38.2. So you tend to see a pullback in a zone like this, or it might just continue higher. We don't know. What we do know is that it's Thursday, and we've had one, two, three levels of rise. All of these in the money longs are vulnerable for a move lower. We've had the pump up, so we're going to be looking for a breakdown of that. The daily ATR is 120 pips. So how much more potential is there to go on the upside is the question. 20 pips maybe. Pretty strong move up. that momentum appears to be fading. So we'll monitor this for the move lower. We also are familiar with these types of wicks, they tend to get filled in. The 5-minute chart, we have the low of the day, 21.33, high of the day, the 50s. On the backside of this trend, we've already broken structure on the inside, we've moved back up. So it's a market that's breaking down. We're looking for a break of 121.30 to confirm with a lower high. So I'll just set an alarm on this. Now this scenario could be a move lower to move up for a target in the 80s. I'd like it to move higher and then start breaking down to get a higher entry up in the 50s and move lower. Right, the dollar CAD, we remain on the front side of this bearish trend. Yesterday we wanted to see the move lower, but we got a bid in the US dollar. And I talked about an article, again we can find this in FX Street News, typing in my name in the feed. CAD, the latest article. We talked about the bulls were moving in on a dovish Bank of Canada and a hawkish Fed sentiment. We looked at the US dollar. We talked about it being up here, and we were looking for the move lower. So we're finally seeing that play. This chart that I was drawing, so that's exactly the same scenario. There we have it. So we've got that break in structure now. Right, so we are bearish on the dollar pairs. So we're looking for dollar CAD to come lower today. We drew the dollar CAD analysis. We talked about the W formations neckline over here, drawing in the price. What we got was we got a move up, and today we've got this move back in. So we're seeing that today. So we've got that move up. So there it was. That was yesterday. It's being capped up here. This is the hourly chart. I drew the drawing on the, make that red for resistance. So I'm drawing on the daily chart. Okay, so there it is. That's the W formation. Up. Sorry, up, down. Um, So we closed higher yesterday into this resistance area and coming down. So it's pretty much trapped at this point, but you'd expect an extension lower. But the There's 20 support, 20 EMA support. So let's just look at this on the lower time frames. It's just a continuous move from Asia breaking this trend line here, moving down to almost touch the 38. Depending on your broker, that's 38 being hit pretty much. And we're on the front side, so we're looking for a continuation lower. Tapping my cable crossing, so it's gone up, which is what we wanted to see, right? We wanted to get a higher sell, broken new highs, broken two new highs, almost. And what we'll have is a higher support structure. So we can get that up, hopefully be selling in here. So we'll stick our arm on this. We want it to be less than on a closing basis with a 5-minute chart. So we'll give it that. So with CAD, there's nothing really to do on this. We want to sell high, not really chase something that's already in full flow, because there's always the risk of the move back up. Support. Yes, I mean, yes, it's breaking down this structure. And the likelihood is that it will continue lower, but how much lower will it go? That's the question. What opportunity do we have? I'm not really seeing the structure that I want to see on this at this point. Moving to dollar yen. My article on that. There's our bearish close was 131. Coming down to move up is the thesis. So we have the non-farm payrolls rally, we had a bearish close. We were looking for a bear close, which we didn't get yesterday. We actually had a move up. We had the move up yesterday, but we're now in bearish territory. We've got that close below 131. We're down to 130.60 so far. But I'm not going to be interested in this market really. It's a bit wicky. And we've got the move that we were looking for yesterday. We're in support as per the highs over here. So this could move up. Again, let's have a look at these daily charts. Yeah, it's not really the sort of price action I'm interested in. It's too wicky. My bias is to the downside, certainly into test 50. I'd like to see a move up to be able to short that, but so far that's not what we got. With the euro, we're looking for a bullish close. We've broken structure. So we're looking for a move lower to go up. So if this were to break the bearish cycle, it's now on the front side of this trend, so it's now bullish. Any pullbacks would be expected to stay above 107.10-ish, yesterday's close. So really there's not too much of an opportunity here. 50 pip scalp perhaps into the support area for the day ahead before we move up in a 61.8 or a 78.6, 107.50, pretty close proximity, not really on my radar. So far is cable, and yeah, with cable we've got this hourly structure here. We really need to see that break. We retested and confirm as resistance before looking for shorts. If you try and short too high up, that can easily act as support for the next move up. In gold, we talked about the price. Bears lurking near 38.2 Fibo. So moving up to come down. This 1,000 pip box. Coming up into the counter trend line resistance. 1, 2, 3 weeks of rise. We've now got 1, 2, 3 days of rise. Yesterday was a bullish close. So looking for bearish close on the day, but this is on the front side of the trend, so this can keep going up. We've got this W formation on the 4 hour, so a move into this neckline makes that support. High 70s. So not really seeing any opportunity until we've got these highs confirmed to be locked in on a break belows and break coming back up to retest and move lower. We'd want to see the price below a 78.6 really to confirm the bearish bias. However, in terms of scalping, price is breaking down, locking in highs. We're now bearish on this price, broken structure. So we have trap volume. Now on the hourly chart, we've got this M formation. M formations tend to have a habit of pulling the price back into the neckline. So this scenario is the neckline. Find resistance. We've got this bullish structure here, so shorting above it is treacherous with the risk of a move up. But also it's still, as I said, on the front side of the broader trend line. Again, shorting into that is treacherous for the move up. Our broader thesis is for a stronger dollar, so I anticipate this, if this were to break, to move for a higher high. While on the front side, so nothing to do here. Oil is breaking down, looking good. 1, 2, 3 levels of rise into resistance for the move lower. On the backside of this hourly trend, breaking structure, cautious not to chase anything here. We've got this M formation for the move up to come back down. We will monitor oil for the rollover up here. So to come back up to short. And then watch it again tomorrow for a continuation for the downside. So we'll wrap it up there. We've got jobless claims as important news coming up. Eyes peeled. Have a good day.